So, very good evening to everyone. Let's get started with what are the amendments that is there for your indirect tax paper. That's the 40 marks paper compared to last exam to this exam, and which is not there in your ICA textbook. There can be little confusion that all of you guys can have. The reason why I am saying that there could be a little confusion is that if you look at your ICI textbook, and I have seen it with a few videos available on YouTube and other platform, wherein there are faculties of explained amendments which are there at the end of the chapters as well. So if you can look at your ICA textbook, you can see that there are few amendments that is available at the end of your chapters, which are separately demarcated. They have not included in the main area of discussion. But there are few amendments that you can say that they would have given in a box and said, that amendments would say like, this amendment has come out of Finance Act 2021. This will be effective as and when it is notified. So far, it is not notified. So there are few amendments in chapters like supply, wherein there is an additional section, but those amendments were retrospective. Then we should assume that amendments are applicable from 1st of July 2020, 2017 onwards. But those amendments got notified only on 1st of January 2022, which means that for the people who are writing May 2022 examination, you know that all the amendments that is relevant till 31st of October, those amendments which were effective till 31st of October 2021, that's your cutoff date. So all those amendments that was applicable, unlike your income tax wherein we go by Finance Act and all that, in GST it is more or less fixed. The set in which you have to think about amendment is like 31st October 2021 for May, 30th of April 2022 for November. This is how that amendments date cutoff happens. So as far as you're concerned, those amendments which was there at the end of the chapter was notified as effective only from 1st of January. So let us not learn that. They're not going to ask you questions from that amendment. So whatever has been there in the statutory update of ICI, which you can download from your ICI website, or if you are somebody who's attending this program, I don't recommend you to go through this again, because I have already covered entire topic inside our PDF that is being shared. You're free to share this PDF with your friends. There is no problem with that. Anybody who wants to learn the amendments in a quick glance, they are free to enjoy this particular PDF. Okay. Then let's get started with it. So what are the amendments that we had for this particular examination, which is peculiar? Now, how many questions would come from amendments? That's another area that people used to get confused in GST. Not a lot of questions, believe me. If you look at the pattern of ICA questions from the past, there has been like 10 to 15% of the question that is being asked directly from amendments. But instead, what ICA does these days is that once an amendment comes in an area, or that particular chapter itself becomes a little more important than it was earlier. So if there is an amendment that comes in return chapter, so there is very likely that they'll ask you one question from return chapter. It might be from amendments, it might not be from amendments. This is how that particular structure has been moving so far. Okay, so as and when we discuss these amendments, we should also understand what kind of questions can come, whether it would come as an MCQ question or whether this would come as a descriptive question. So you know that 12 marks MCQ is there, and then you have 28 marks of descriptive. In descriptive also, can they ask this as a short note question? If you look at the previous examination, wherein they have made a lot of new question in DT, and people had a lot of issues going ahead and then trying to understand this particular paper as such, paper 4. So what we have to ensure is that we don't go through the same set in this particular exam. That is why we are looking into amendments and everything. So we are expecting that the taxation paper should be lighter in May. At the same time, you should be able to score maximum marks. Okay, that should be the agenda. So as and when we discuss an amendment, we'll go and look at, can this come under MCQ? Can this come under a descriptive? What kind of questions can come under this? Now let's get started. So the first set of amendments I'm going to discuss are from Exemption chapter. So if you look at Exemption chapter, I'm looking at the first amendment, which is effective from 1st of October 2021. I'll read through the amendment. It's very easy and understandable. And I'll also tell you what is the change that has happened from what you would have already learned before. If you had learned, okay. If you learned the amended one, then you would know that, okay, I only knew this. Okay. So services by way of training program to central government, state government, union territory. What it talks about? Talks about training program provided to central government, state government, and union territory. The services by way of training program provided to governments were already exempted. If you look at the previous notes or previous syllabus, you would find that services by way of training program given to government. So government's thinking is very simple. They're saying that, okay, so somebody is giving training to the government employees. Okay, so now I'm paying some money to these private parties who are actually providing training to these government employees. Now, should I charge GST on that? Now, the government is a recipient here. You have to think about it. Government is a recipient. Should I charge GST from them? If the government is recipient, even if the GST is being charged, ultimately it's charged from whom? It's charged from government, central government, state government, or union territory. Are you guys understanding? So government is saying that why should I add an additional kitty on me? So I pay to this guy and this guy pay to the government. Not required. So we would actually give exemption. But that exemption was earlier covered only when 100% of the expenses would be borne by the government. Now, there are a lot of training programs that happens wherein not 100% would be borne by the government, wherein some nominal amount will be charged even from the participants. When I say nominal amount, it could be 100 rupees, it could be 200 rupees, 300 rupees, but bulk of the training is being conducted by the government itself. So they wanted to consider this also, and they said, now it is not necessary that 100% should be paid by the government. How much should be paid by the government? Anywhere above 75%. So if the expenses, which is more than or equal to 75% of the total expenses incurred by the government, and even if you charge some nominal amount from the participants, it is still exempted. What is exempted? Services provided by way of training program to government is exempted. So whatever is being billed to the government, that will not have any GST application. Are you guys understanding this? Yes, yes. You have any questions, or can I go ahead? Okay. So let's look at the second exemption that we have. So the first exemption can be said that there was an exemption already and we have changed slightly on that particular exemption. Now the second one is an additional exemption that is being introduced. What is this additional exemption? They said granting of national permit to goods carriage to operate throughout India or contiguous state is now exempted. Now first you have to understand that when you are applying for a permit, as a goods carriage vehicle, you can have two type of permits. One is a state permit, another one is a national permit. Now what permit is being now exempted? National permit is being now exempted. So whatever money that you pay to a state transport authority for your vehicle to get, which vehicle? Goods carriage vehicle to get a national permit, that will be now exempted. This is an additional exemption that is being introduced. So you can see a lot of lorries that are on the picture. We call them as NP lorries. It has national permit. What do you mean by contiguous state? Connecting states. Two states it is going, or it is going throughout India. So whatever permit you take beyond a state, that permit will be having no GST paid on the permit charges. Now let's look at the third amendment. Now this amendment is not an exemption given. This amendment instead is an exemption that is withdrawn. Now why should I learn something that is withdrawn as exemption? Because now it is taxable. They can test this also in the exam. So you have to be careful what kind of amendments you wanted to learn. So you cannot ignore something that is being omitted also. You have to actually Learn that so that if that comes in the question, you would say that it is now taxable. Okay. So what kind of exemption is now withdrawn? This is with regards to leasing of asset. So we had in the segment of exemption, you have multiple leasing which is being exempted. And one of the leasing activity that was exempted is leasing of rolling stock assets to Indian Railway. But who is giving this particular rolling stock asset? What do you mean by rolling stock asset? It can be coaches, wagons, locos, all of these railway coaches, wagons, etc. Now, why should somebody rent it to Indian Railway? It's not somebody who's renting it to Indian Railway. Indian Railway Finance Corporation itself. So, Indian Railway Finance Corporation is an entity which is having both participation from government and participation from others. So what government had planned is that they said, okay, we will set up a Indian Railway Finance Corporation wherein we can get a lot of money from others and we can fund it to Indian Railway by way of what? This Indian Railway Finance Corporation will buy a lot of engines and wagons and whatever is required for the railways, railway coaches and everything. And they will rent it to Indian Railway. Indian Railway is completely owned by government. So whatever profit made by Indian Railway cannot be shared out. So they said, okay, now let me share something as a leasing charges. So Indian Railway started paying leasing charges to Indian Railway Finance Corporation. This was the method in which they used to fund more and more new trains. Instead of Indian Railway directly buying, who will buy? Indian Railway Finance Corporation will buy and give it to Indian Railway. So Indian Railway need not have a lot of funds allocated in the budget. Are you understanding the mechanism in which it was operating? Now, this leasing charges, which was paid on a monthly basis by Indian Railway to Indian Railway Finance Corporation, it was earlier exempted till 31st September 2021. 22, it is 21. So, till 2021 September, it was exempted. Now, from 1st October onwards, it is now taxable. So, whatever leasing charges or rental charges they are paying on the coaches, wagons, to whom? To Indian Railway Finance Corporation should also have GST on top of it. Are you guys understanding this? So these are the three exemptions that is being amended. Okay. So training program, and national permit, and leasing of rolling stock asset. Can I have a quick yes on the chat box if it is clear for you? Okay. Now let's look at the next set of amendments that we have, which is in chapter registration. Now, registration has, I'll give you a quick background on, revocation if you don't remember revocation that much, so that I can invite your attention to revocation. It is expected that you remember all of this, and I'm telling you only the amendments. Revocation of cancellation is the area. Revocation of cancellation is an area where we have an amendment. What do you mean by revocation of cancellation? There are two types of cancellation that is available in section 29 of CGST Act. Section 29 of CGST Act talks about cancellation. What are the two types of cancellations that we have? The first type of cancellation is cancellation by the registered person itself. We call it as voluntary cancellation. Who cancel this? The person who has taken registration, he himself is voluntarily saying that I want to cancel it. Why should he cancel? There could be reason like he stopped his business, he transferred his business, he is no longer liable for registration. All of these reasons could be the reason why he is going ahead and then cancelling his registration. This is one type. The second type of cancellation is suo motu cancellation. What do you mean by suo motu cancellation, or what's the difference between a voluntary cancellation of GST number and a suo motu cancellation of GST number? There should be a difference, no? In voluntary cancellation, who's the person cancelling the registration? Registered person who has obtained the registration itself is cancelling the registration. Okay. Now, in case of Kyomoto cancellation, it is cancelled by the officer. The proper officer is cancelling your registration. Now, why should the officer come and then cancel your registration? There must be some reason. And the reason could be like your registration was improper. You took the registration as a forgery. You did it out of fraud, misstatement. You had suppression of fact, or you did not file your returns for a continuous period. So they have put in the 3 continuous tax period, you have not filed your returns. You have not started your business for 6 months after you obtain the registration, or you have contravention of certain provisions under GST. So there are multiple provisions that is being listed, and for the last exam they had added additional reasons also. So because of multiple reasons, the officer can, it's not mandatory, the officer can, if he wants, come and cancel your registration. So this registration cancellation is not done by you, it is done by the officer. Now, when will the officer do? Officer will send you a show cause notice, ask you the reason why I should not cancel your registration, give you an opportunity of being heard, and post which the officer can give you cancellation. Now you can always, the officer will come and then give you a show cause notice. You have 7 days to reply. The officer will take another 30 days to cancel your registration. Now, once the cancellation is over, what will be the point in which my cancellation will be over? The point of deciding whether my registration is cancelled or not is the date of order of cancellation. What is the point in which I'll know whether it's cancelled or not cancelled? The order of cancellation is passed or not. Now, once the order of cancellation is passed, which means that my GST number is gone. Are you guys understanding? So my GST number is cancelled. Now, this cancellation is done by the officer, and I am getting only some days to reply. Are you guys with me? So this could be a case wherein I delayed the reply and my registration was cancelled and order came. And there are a lot of practical cases wherein these people did not receive this order, or these people could not reply on time because they were not in India. A lot of practical cases started coming in. So to avoid this, government had already put in an additional provision. They said when the cancellation, only in one type of cancellation, which cancellation? When the cancellation is done by the proper officer. In case of suo motu cancellation, the registered person has an option to apply for something called as revocation of cancellation. Now, this revocation of cancellation can also be applied only within a time limit. And what's the time limit? Normally, the time limit is 30 days from the order of cancellation of registration. That's what you can see it on the screen. It is 30 days. Normally, it is how much time? 30 days from the order of cancellation of registration. Now, this 30 days can also be over. Like, the whole cancellation and revocation time period can be over in a month or two. And this person was not aware of it. Now he wants to do something about GST registration, because again, applying for a GST registration, his business will stop in between. Okay, to avoid that, government decided, okay, now I'll do one more thing. What is it? Generally 30 days. Say if the registration was cancelled, let's take a example number to understand this. Say if order of cancellation came on 15th of January 2022. Normally, what will be the last date on which I can go for revocation? So 16 days in January, make it 31st, and 14 more days in February. So 14th of February is the last day wherein 30 days are over. If I don't apply for revocation within 14th of February, then I cannot revoke and then get my GST number back. So revocation means can think about it as cancellation of cancellation. Your GST number is cancelled, but you want to go to the officer and say that please don't cancel. It was my mistake. I'll give you all the details that is required. Okay. So you have to look at your section 30 to understand what is the procedure for that. Now, this 30 days is now extended. What is that they have done? They said we will give you. They have inserted a proviso in section 31 and they have said we will give you additional days. What is additional days that is being given? They said you have to apply. Additional days will be given if sufficient cause being shown. If enough cause is being shown, I'll give you additional days. 30 additional days will be given if you have applying to an additional or joint commissioner. So which means that again from whatever we have seen here, from 14th of February, you will get another 30 days. In February, 14 days, March, 16 days. So you can apply till 13th of March for revocation, provided you have taken approval from whom? Additional or joint commissioner. Not only that, you have another 30 days given. So totally how many days it will become? In total, it will become 90 days. So you can actually go for revocation from your order of cancellation within 90 days, provided for the next 30 days you have to actually take a permission from your jurisdictional commissioner itself. This is the first amendment that we had in registration chapter. So from here again 30 days, which means that in March I have 15 days, in April another 15 days. So 15th of April with a permission from commissioner. You can see here, if my order of cancellation came on 15th of January, till 15th of April, I can actually go and then apply for revocation. Earlier, it was only 14th of February. I hope this is clear. Then, the next amendment that we have is in Invoice chapter. Okay. Now, the first amendment is on e-invoicing. We'll first try to understand who has to actually do e-invoicing. So e-invoicing is a very small process. It is done to ensure that the invoice reconciliation between the supplier and the recipients are easy. Fake invoicing is completely avoided. And e-invoicing does not mean that everybody has to go to an online platform and generate their invoices from there. It does not mean that. It only means after your computer system. And this e-invoicing provision is only applicable to a bigger registered person. There is a turnover limit that they have kept, beyond which only invoicing will be mandatory for you. So if you are somebody who is into e-invoicing, only thing that you have to do is that you have to actually go to an invoice reference portal and then get an invoice reference number. It could be in a QR code and a reference number, and that should be part of your invoice. So which means what? If the invoice is an e-invoice, then you can actually see a QR code and an invoice reference number inside the invoices, which will give you clarity that this particular invoice has been uploaded. And this is mostly done to ensure that there is no fake invoices. Also, you know that for a person making inward supply, for them to take input tax credit, that invoice has to be reflected in their 2A or 2B. And the reconciliation used to be a big pain for all of them, a huge pain. So to avoid that, they said e-invoicing will actually give you clarity on one invoice can be tagged to the another invoice, and every invoice is being generated with an additional number which can be matched easily. So e-invoicing is mandatory for whom? Invoicing means what? Your software system of billing has to go connect to the invoice reference portal and then get an invoice reference number and the QR code and then stamp it on the invoices. That's all they have to do. So the invoice will look normal, there is no change. Who are required to do invoicing? All registered businesses. Again, e-invoicing is not an amendment for this exam. It even asked in an examination last. Okay. So the question on what is invoicing, what is the benefit, that question is not going to get repeated. But they can ask you a question which is relating to that amendment. So first understand who are required to do e-invoicing. This is the latest provision. All registered businesses with an aggregate turnover in any preceding financial year from 2017-18 onwards having greater than 50 crore aggregate turnover. Very important point that you need to understand here is this is the only place where they have not said previous financial year. They said any preceding financial year. If in any preceding financial year your aggregate turnover was above 50 crores, then e-invoicing provision is applicable to you, which means what? In 2017-18, suppose my turnover was 25 crores, but 18-19, very good year for me. My turnover went up to 60 crore. It was above 50 crores. But 2019-20 again, it was like COVID and all that, so it came down to 25. 2021, no turnover at all, full COVID. Will I be having e-invoicing provision applicable to me? The answer would be yes, because in one of the years it was above 50 crores. But is that an amendment? No. The amendment is that there has been certain persons who are excluded from e-invoicing provision. They said even if these people's turnover in any of the financial year from 2017-18, 17-18 was picked because that's when the GST was introduced. So following persons, even if their turnover in any of the preceding financial year was above 50 crores, they still need not do any e-invoicing. And already 5 parties were there in that list. Who are those parties? SEZ, insurer, banking company, financial institution including NBFC, goods transportation agency, supplier of passenger transportation. So passenger transportation agency, the theaters, multiplexes. Now they have added an additional person into that, which is government and local authority. What is it they have said? They said government and local authority also, even if they have a huge turnover, they are not liable to do any e-invoicing. That is the additional amendment that we have. Okay. So apart from these 5 persons, they have added a 6th person. What is the second amendment that we have in Invoice chapter? And this amendment is actually in e-waybill facility. So for those people who are, trying to understand e-waybill, I'll give you a quick introduction on how the e-waybill facility works. So you know that if you're transporting goods, there is a supply or an activity which is other than supply, which involves movement of goods, having a value, having a consignment value. They have used the word consignment value. Yeah, consignment value which is exceeding 50,000. When I say consignment value, the understanding is including taxes. Okay, so which exceeds 50,000, then the person who is causing the movement of goods needs to generate an e-waybill apart from their invoices, whatever document that they have. It could be an invoice, it could be a bill of supply, it could be a delivery challan, whatever document that they have. Normally, apart from that, there is an additional document that is required to be generated, which is called as e-waybill. Okay, so which means what? Everybody who are supplier of goods, this is only required for supplier of goods. Everybody who are supplier of goods, who are actually sending goods, which is having movement of goods, will invariably will have to generate an e-waybill. So there's a separate portal to generate an e-waybill. So everybody who is in the business wherein they are transporting goods, a retailer, wholesaler, steel trader, no, iron trader, cement trader, everybody who is transporting goods will have to, on a day in day out basis, will have to generate e-waybill, find out who is the recipient, give their details, where I'm delivering, generate an e-waybill, and then give it to the transporter. Then transporter will transport the goods. This is the procedure. So there are 3 parties generally involved. Who are they? The supplier, the recipient. Okay. Now the product has to go from supplier to recipient. And there is a third party involved, that is transporter. Now the supplier or recipient, either one of them can arrange for an e-waybill. If I'm the if the recipient is the registered person and the supplier is not registered, then recipient will generate an e-waybill. So the e-waybill provision in Rule 138 clearly states all of these provisions. But you have to understand that on a day in and out, like if for every transaction which causes movement of goods and which has the value, consignment value more than 50,000, there's an e-waybill that is generated. Now, why e-waybill is so important? Because in one of the rules in e-waybill, the officer is being given power even to stop a vehicle. They can even stop a vehicle, check while it is transporting, they can actually stop a vehicle and check whether that person is having e-way bill. If not, they have additional provisions to levy penalty, confiscate the goods. They can take the custody of the goods. They can even confiscate the vehicle. They can take the custody of the lorry or the truck. These kind of provisions are the drastic provisions. So everybody will invariably will generate an e-way bill. Now, what is that the government thought about e-way bill? They said e-way bill is a good mechanism to ensure everybody is complying with GST. If somebody is not complying with GST, what government decided to do? I will block e-way bill for them, which means they cannot do any transaction. So they're saying that instead of, like, when GST came in, what was the motto that we have said? It is EOB, ease of doing business. But if you don't generate e-way bill, then it will be another EOB for you, end of doing business for you. Okay, now they're converting that to that. They said, if you don't generate e-way bill, that means that I'll stop you. You will not be able to do any businesses there. Okay. So they said, if you are not a good guy, if you are in the list of bad list, in my understanding, you are in a compliance bad list, then I will not allow you to generate e-way bill, which means that I'll make sure that you are doing end of doing your business. You're not complying with GST, then I'll stop. I have enough provisions to ensure that I'm not letting you doing your business itself. This was the thought. So the provisions was very drastic. What is that? The provision they said, blocking of e-way bill facility. They said, we will block your e-way bill facility if you don't comply with your GST. So there were 4 reasons listed on which government was going to block the e-way bill facility. What are the 4 reasons? Let's read what is there on the screen. Following persons shall not be allowed to generate e-way bill as a supplier in respect of outward supply. Why they'll not be allowed to generate an e-way bill? Because they're not complying with something. And they have listed what's the reason. But if they're not able to generate e-way bill, which means that they cannot do any movement of goods, their sales will halt, their business will halt. So it's a big trouble for them. They said, following persons will not be allowed to generate e-way bill as a supplier in respect of outward supply. What are the 4 persons? One is composition levy scheme person. It could be 10(1) or it could be 10(2)(a). If you have not filed CMP 08 for 2 consecutive quarters, which means 2 quarters you did not file your CMP 08 and paid the taxes, then your e-way bill is gone. With 3rd quarter onwards, stop doing business. Second, you're not on composition levy scheme, you're a regular taxpayer, but you have not furnished returns, that is 3B, for consecutive 2 tax period. For 2 tax period, you have not furnished 3B, then done. You're in deep trouble. Okay, your e-way bill facility will be blocked. Then 3rd one, regular taxpayer has not furnished GSTR1 for any 2 months or quarters. Regular taxpayer has not furnished GSTR1. Earlier we said 3B. 3B for 2 tax period, gone. Or GSTR1 for 2 months or 2 quarters. That is also the reason why we will stop you from generating e-way bill, which means you cannot do business. Or a person whose registration has been suspended. What is suspension? When you are applying for your cancellation, they'll suspend your registration. When they find that you're not complying and they want to cancel, first they'll do suspension. If your GST number is suspended, then you cannot generate any e-way bill facilities. Your e-way bill facility will be blocked for you. So what's the amendment here? This provision, if you have learned already this provision, you would say this was already there. I've learned about this provision earlier also. Now the change is that earlier it was really draconian. It was really bad. They said if when you are generating an e-way bill, there are multiple persons GST number has to be given. One is supplier, second is recipient, third is transporter. So earlier, if any one of this GST number was not complying, you can say that those people who are not complying this, their GSTN is blocked. So any one of these GST number is blocked due to any of the 4 reasons that you can see here. Then that e-way bill will not be working. Which means I'm a supplier, I'm a steel trader, I do GST properly. On a daily basis, I'm filing, I'm doing e-way bill, I'm monthly, I'm filing the returns, everything is pakka. But one of my customer has some GST compliance issue. He did not file returns for 2 tax period, which means I cannot generate an e-way bill for him. I'm a good guy. Why am I getting the problem? My sale is being stopped by you. This was the issue earlier. Now they have, what is the amendment they have done? You can see what is the amendment we have. The amendment is that earlier, blocked GSTIN couldn't generate e-way bill in any capacity. Now it is amended to relax, and blocked GSTIN can be used for their e-way bill for their inward supply, which means if I am having 2 months of returns not filed, my GST number is blocked, which means I cannot generate an e-way bill when I make an outward supply. But for inward supply, they can use my GST number. There is no problem. Guys with me? So for if a transporter's GST number is blocked, but that's all right. If I want to use GST number for an e-way bill I'm generating to my customer, and I'm using one transporter, his GST number is blocked, e-way bill will still work. This is the amendment. Are you guys understanding this? Can I have a guess on the chat box if this is clear? Little bit of understanding of e-way bill facility is also required. There was a question which says that does that mean I can claim ITC on it? Yes, ITC is not blocked based on your file return or not. Your ITC will be as usual. But when can you take ITC? Only when after 2 months or 3 months you have not filed, no? After 2 months or 3 months you actually file. That's when you will claim your ITC, right? Only when you claim you can get it. That's it. It does not have any direct connection between that. Okay. So only thing that they're trying to tell you is that if your GST number is blocked, then you cannot make any e-way bill as an outward supplier. That's it. But if your GST number is blocked and somebody wants to generate an e-way bill and you're the customer, you're the recipient or your transporter, no problem. This is the relaxation that they have done. So I'm trying to connect the e-way bill 138E also together with that particular additional provision. Now let's look at the next set of amendments that we have in return chapter. So we have late fee for delayed filing of returns that is being introduced. So whether late fee was already there? Yes, it was already there. So what is the change that we have in late fee then? They have actually kept a maximum late fee that can be levied. They have kept a maximum late fee that can be levied. That has been limited now. Means they have rationalized. Earlier the late fee used to be really high. It is a daily late fee, but it used to be aggregated to a huge amount. So if somebody is there to file, say for example, even if it's nil return for 10 months, then the late fee used to be really high because it used to come per day 100, 200 and all that. And then first thing that they have done is that of course, when it is 100, 200 rupees per day late fee, everybody is going to represent to the government and say that please don't levy this kind of a late fee. That is going to be the request for sure. That request came in. Second thing is that they did is they slashed it. They said we will reduce the per day late fee. But even after reducing the per day late fee, the maximum late fee that was kept was also high. So section 47 had the late fee written down there. The maximum late fee was also very high. Now they have rationalized that okay, late fee has to be reduced. So first, for a very basic understanding, let me define what kind of payments that can be there to the government. There can be taxes. There can be interest. When will I pay interest? When there is a delayed payment of taxes. Then there is late fee. When will I pay late fee? When there is a delay in filing of returns. There can be penalty. and there can be demand payment. There is a demand notice that you've got. You're making payment on that demand notice. So there can be tax, interest, late fee, penalty, demand payment. All of these are the ones that you would see on a challan. So when you fill a challan, you can see all of these as the minor heads. Now, first question is, what is the late fee applicable when you delay the payment or delay the filing of returns? So every return that we understand has a due date under GST. So when I'm discussing about late fee, I would also like to give you a quick recap on what are the due date of returns, because that was amended last time because it was applicable for the last exam. I cannot say that this is an amendment for May 22, but since that amendment had been like rationalized and I have a better chart to explain you, so I'll try to give you an understanding on that also. So the first discussion is on GSTR 1 and 3B. And I'm pretty sure in the last exam, whoever has written the last exam would have already heard about a scheme called as QRMP scheme. So now you have an option to make a quarterly return with a monthly payment option. So certain people can actually do even GSTR 1 and 3B on a quarterly basis. So every registered person, except an RTP, TDS TCS person, input service distributor, and OIDAR. So except NRTP, what is NRTP? Non-resident taxable person. TDS, a person was registered for payment of TDS under section 51. A person was registered for payment of TCS under section 52. Input service distributor and online information database access retrieval service provider from outside India was registered. These people, especially these things are not discussed except for NRTP. Other areas are not discussed in detail in intermediate syllabus. So you don't have to really bother about who are these people. But understand that except these people, all others will have to go ahead and composition levy scheme for sure. So except all other people, they all registered persons will have to go and then file two returns. Two returns mandatory. Which are the returns? GSTR 1 and GSTR 3B. What is GSTR 1? GSTR 1 is the return on outward supply. So whenever you make an outward supply, be it a sale or providing a service to someone, you will have to give either invoice wise details or consolidated details on the return called as GSTR 1 as per section 37, which means that you think about it. I'm a supermarket. On a daily basis, I'm making a lot of sale. I'm billing a lot of invoices. In some cases, if that sale is B2B, registered person registered, I have to give invoice wise details to GST department using this form called as GSTR 1. Apart from that, we know that we make a computation called as net GST payable, right? So in that we use outward tax liability computation, then we use input tax credit, then we compute and then do the set off as per the relevant provision under section 49, and then we compute what is net GST. So this computation and payment of net GST is generally done not with GSTR 1. GSTR 1 is kind of a return which gives the government information, only information. Now, apart from that, you have to file GSTR 3B, wherein you have to decide what is your net liability. So this GSTR 3B is called as the summary return, and everybody has to file it except those people I've listed above. Everybody has to file GSTR 3B also. And in that 3B only, when we decide how much is the net GST payable, so we have to give the details of input tax credit and everything in 3B. So it's more of a summary return, consolidated, computing how much is the GST payable. So except for these special registrations, everybody has to file GSTR 1 and GSTR 3. So what is the deadline to file this? If I know that there is a late fee, I should also know what is the due date, right? So to understand due date, we should actually understand what is their turnover. Because this scheme of giving them an option to do quarterly returns is only available if their previous year aggregate turnover is less than or equal to 5 crore. So the question is that, is your previous year aggregate turnover less than or equal to 5 crore? If the answer is no, we can immediately say that, you cannot do quarterly return. You have to file return on what periodicity? You have to file return on monthly basis. Now then the next question would be, so which means that if your turnover exceeds, in last year turnover is more than 5 crores, they all Reliance, Tatas and everybody who's having more turnover, everybody will have to go, not Reliance and Tata, even the smaller companies will have 5 crores as very small turnover. The turnover exceed 5 crore, of course, they will have to go ahead and then do monthly file of which returns GSTR1 and GSTR3. What will they show in GSTR1? Their outward supply. What will they show in GSTR3B? Their net to GST payable computation. Now, what is the due date? Monthly filing means they have to have a due date in the next month itself. Okay, so let's take a month, January 2022. Suppose my last year 2020-21 turnover is 25 crores, which means I'm not a person who's having small turnover. I'm not eligible for this quarterly return mechanism. I have to go ahead and then do monthly filing. Now, what will be my deadline? January month, GSTR1 needs to be submitted on 11th of February, 11th of subsequent month. In that, I will upload all the details which will go sit as 2A or 2B of my customers. Okay, so government wants little more time before 3B. They want to do the reconciliation. So they said 11th of subsequent month, everybody has to file GSTR1. What about 3B? It is 20th of subsequent month. So normally, date of payment of taxes is together with 3B, which is 20th of subsequent month. So 11th, I upload my outward supply. Then whatever 2A, 2B inward supply is available, I will compute what is my ITC and I find out what is the net liability and then I file 3B. This is what I have to do. What if I don't file it on 11th? What if I don't file it on 20th? What will be applicable for me? I will have late fee applicable. This is the first understanding that you need to have. You will have late fee applicable if you don't file it on the due date that is mentioned. Now, is this due date available for everybody same? No. Now, you have to check whether their previous year turnover is less than or equal to 5 crores. What if that turnover is less than or equal to 5 crores? If that's the case, you will have to go back to this side of the chart. What it says, is their turnover less than or equal to 5 crores? The answer is yes. Then we have to ask them one more question. What is that one more question? Did they opt for QRMP scheme? Again, for everybody whose turnover is less than or equal to 5 crore, need not opt for QRMP scheme. If I want, I can still file it on a monthly basis. There will be a lot of companies who are filing it on a monthly basis because they want to have monthly reconciliation. They are doing business with bigger players. So if they don't opt for QRMP scheme, again it goes back to monthly filing. The deadline would be 11th and 20th. If the answer is yes, if they are opting for QRMP scheme, then do they have to file their returns on monthly basis? Can I have an answer on the chat box? Please answer on the chat box. Let it be active. If I offer QRMP scheme, do I have to file my returns on monthly basis? Do I have to still file GSTR 1 and 3B? I have to still file 1 and 3B. But do I have to file it on monthly basis? No. What will be the periodicity? I'll have to file it on a quarterly basis only. But what about payment? Will I make a monthly payment or quarterly payment? Quarterly. What is the payment? What is the expansion of QRMP scheme? Quarterly return, monthly payment. So payment is always monthly, which is the only set of people who can actually have quarterly payment. Only in one scheme quarterly payment is allowed. It is composition levy scheme. Correct. In CLS only quarterly payment is allowed. All other cases it's monthly payment. Now, if these people, am I talking about composition levy scheme? No, I'm talking about regular scheme. On the regular scheme, person has an option now to file returns on quarterly basis, but their payment is on monthly basis only. Okay. Now, for their payment, they have fixed sum method, assessment method, and all that is there in your QRMP scheme. Now, I'm not going to that. Now, your payment is monthly, but your filing is on a quarterly basis. What is the filing mechanism that we have? GSTR1 due date is 13th of subsequent month. Why is it relevant? Because when I'm taking you through the delayed fee, delayed late fee, you need to understand what's the deadline. In an examination question, what kind of question can come? They can give you a practical question wherein they can say, Mr. Raju has opted for QRMP scheme. He has filed his GSTR1 for that particular quarter on 15th. Means you should know how many days of delay. If that delay is quite longer, you should also be able to understand there is a maximum that is being fixed now, relaxed. Now there is a maximum late fee that they can charge. Okay, all these are connected portions. Okay, so GSTR1 deadline in normal cases was 11th, but QRMP it is 13th. But from what date? What date? From the end of the quarter, because you are only filing quarterly GSTR1. Means April, May, June, this quarter. Your GSTR1 comes only in July. That will be 13th of July. Then GSTR3B instead of 20th, depending upon the state, we don't have to learn the state. Depending upon the state, it is 22nd or 24th of subsequent month. Okay, most of the states is given 24th. So GSTR 3B date is again in quarterly QRMP scheme will be 22nd or 24th of subsequent month from the end of the quarter. You don't file it on monthly basis. You make the payment on monthly basis and make the return only on quarterly basis. Now this GSTR1 is only available 3 months once. So it means April, May, June or Jan, Feb, March. Together we will file it on April 13th. That will be the deadline. Now, the first 2 months, you have an option to upload your details through another facility, because if the other person is crying for the credit, because only when you upload to GSTR, one other person gets the credit, no? So what about the first 2 months? Third month, I understand. You will file it on 13th. What about the first 2 months? How will you upload the information and how will the other person take the credit? So you have an additional facility called as Invoice Furnishing Facility for the first 2 months. That can be done from 1st of the next month till 13th of the succeeding month. It can be done. You can actually upload your information and the other person will still be able to take the credit. So this is the mechanism in which your returns are being filed right now. Now let's look at what is the late fee that is applicable. Now late fee is again based on the aggregate turnover. So they said delayed filing of GSTR1 or GSTR3B. With effect from June 2021, they have relaxed the maximum fee and now the revised maximum fee available. If it is nil return, what do you mean by nil return? You don't have any outwards apply. It means you still have to file GSTR1. In the month of January, no outwards apply at all. But still file a GSTR1 with zero information. You will put zero into everything or nil into everything. So this return is called as nil return. No outwards apply. Or you're filing GSTR3B, but then there is no tax payable that you have. A nil tax payable is available. That's also called as a nil return. So if you are filing a nil return, then your late fee would be per day 10 rupees under CGST. Very important point you need to understand here. We are discussing about CGST. I've written something here. What is it? The same late fee will be applicable under SGST Act as well. Hence, the total late fee would be 2x of the above, which means for the nil return, they have said in CGST your late fee for every day of delay you have not filed. Say you have not filed GSTR1, it was a nil return. On 11th, you are supposed to file. You filed it on 13th, 2 days. Now 2 days, they are saying that 10 rupee per day will be the late fee under CGST. The same late fee is applicable under SGST Act also, which means totally how much will be the late fee I have to pay? 20 per day. Similarly, the maximum late fee is now capped and they said it's 250 under CGST, which means under SGST also the maximum late fee that can be levied would be 250. So the maximum late fee that can be levied if I delay for any number of days, Okay, say I delayed it for 100 days. A nil return was delayed for 100 days. For each day, what is the late fee? 10 per day for CGST, 10 per day for SGST. Means CGST, it will be 10 into 100 days delay, 1000 rupees. For SGST, it will be 10 into 100 days of delay, again 1000 rupees. What's the maximum that can be levied? 250 under CGST, 250 under SGST. So the maximum would be 500. This is the relaxation that they have given. They said, I'll rationalize. I'm not making money out of late fees anymore. Because what people will decide to do, you think about it practically, what people will decide. So how much of fee? I'll not violate. This is what people will generally decide. If the fee is less, no, like it's like taxes only. Like if the tax is reasonable, people will be ready to pay. The taxes are exorbitant, and people say, I'm not paying at all. Are you guys understanding? So the same analogy is being applied here. So they said, I want to rationalize. If it's nil return, 500 maximum late fee that you can collect. But very important in an examination at intermediate level, when you're writing late fee, don't write penalty. It is late fee. Use the term late fee correctly. Second, your return is not a nil return. You have some activities that was happening. Then your late fee depends upon your aggregate turnover, but not the per day fee. Per day fee is fixed. It is 25 per day for CGST, 25 per day will be SGST. So 50 rupees per day would be the late fee if you have some. It is not a nil return, which means you have some tax payable or you have some outward supply that is being mentioned. So GSTR 1 and 3B is not filed with nil. It has some information filled in. So if that's the case, then your late fee is being changed to 25 per day under CGST, 25 per day under SGST, which means 50 per day. Now the maximum is different depending upon your turnover. They're saying that, are you rich? I'll charge little more. If you're not rich, then I'll charge little. So they're saying if your turnover is between, previous year turnover is between 1.5 crores, sorry, if it is between 0 to 1.5 crores, means it is less than or equal to 1.5 crores, then 1000 will be the maximum, not per day. 1000 will be the maximum late fee that you can collect under CGST. Again, one more 1000 will come from SGST. So 2000 will be the maximum late fee that you can collect if your previous year turnover is up to 1.5 crores. Okay. Then, if the aggregate turnover is more than 1.5 crores and less than or equal to 5 crores, 1.5 crores to 5 crore, your per day fee is same. If it's not nil, it is 25 per day, but the maximum is capped at 2500 under CGST, 2500 under SGST, so which will be 5000. Now above 5 crores, it will be the normal late fee itself. Maximum is 5000 under CGST and SGST also 5000 is 10,000. 10,000 was the earlier one. So what is the amendment if you ask me? If you look at the textbook, you would find 10,000 to be the maximum late fee in all the cases. Now they have rationalized and they said for nil, it is 500, up to 1.5 crores, 2000, up to 1.5 to 5, 5000, above 5, 10,000. Okay. So what about IGST? Do you have another late fee under IGST also? No. The late fee is paid under CGST and SGST, then IGST late fee is waived. There is no late fee for that. That's not applicable. IGST late fee would be nothing but CGST late fee plus SGST late fee. So if you are paying under that, then there is no late fee under IGST. You have to additionally pay. Is it clear? Can I have a quick yes on the chat box? Great. So let's look at GSTR 4. Okay. Now you know that if you have opted for composition levy scheme or 10(2)(a), you have to file a quarterly statement. You have to file a quarterly statement. You have to file a quarterly statement called as CMP 08 on 18th of next month from the end of the quarter. You have to make a financial year return called as GSTR4, which is to be done on 30th of April every year. 30th of April next financial year. Okay, is next financial year. Okay, 30th April next financial year. So the understanding that the question that I have is this: what if I delay GSTR4? What if I delay GSTR4? Will I have late fee for that also? Yes. The funnier part is that CMP 08, there is no specific late fee that I've mentioned, but they're charging the normal 10 per day and 25 per day. That's the understanding that practically we're doing right now. Then there is nothing mentioned in the law. So 47 does not talk about it now. So for GSTR4 also there is a late fee. Okay. Again, the late fee is also rationalized. They have said if it is nil return, then again 10 per day under CGST, 10 per day under SGST, maximum is 500. And if it is other cases, 25 per day under CGST, 25 per day under SGST, maximum is 1000 under CGST, which means 2000 under SGST. 2000 under GST put together, 1000 plus 1000. Okay, so here in the first case, it was 500, 2000, 5000, 10,000. So here in composition, it is 500 and only 2000. Why? Can anybody think and then tell me why there is no slab of 5000 and 10,000? Yeah, above 1.5 crores, you cannot actually choose composition levy scheme. So basically, you will not be under composition levy scheme. So the other two options are not relevant for composition levy scheme. So that's why the first two options are even applied to GSTR4 also. Correct answer. Now let's look at the last amendment that we have in the statutory update, which is annual return and reconciliation statement. Again, the number of questions that they're asking on this area is very less. But if they want to ask a question in terms of an MCQ, they can ask. And if they want, they can ask a short note question wherein they can just ask you put together and say that who are the persons, or write a short notes on annual return. They have asked for final return once. So we can expect that kind of a question also in this particular area if they want to ask. But that will be an optional question in the last question that you have. You can, when you see the model question paper, you would have seen that. So from financial year 2021-22 onwards, with the annual return is now mandatory. Earlier, okay, 2020, 21, or like the previous so many years, they have kept a turnover limit. They said annual return is required for persons whose turnover exceeds, the previous year turnover exceeds 2 crores only, kind of a limit was given. Now they said annual return is required for everyone. So I'm saying persons other than composition levy scheme, okay, they have a different return structure. So they said annual return is mandatory except for certain parties. Who are those people who are not required to file annual return? GSTR 9 is mandatory for everybody other than input service distributor, TDS TCS person, TTP, NRTP, OIDR. It's very, very easy to remember this. Because what is GSTR 9, which we call it as annual return? Now, what is this annual return? This annual return is where you are comparing your GSTR 1 and 3B, which you file on monthly or quarterly, to the books of accounts. Because you will do an auditing and you will prepare a books of account. In that, when you prepare a books of accounts, in the end, what is that you need to check? You need to know how much is your sales. The turnover that you show in your books of accounts and the turnover which has a sum of all your returns filed should tally, no? If it is not tallying, it should have a reason why it is not tallying. You have to mention that particular reason in your annual return. That is called GSTR 9. Now, this is required for everyone except input service distributor. They don't make any outward supply. TDS TCS persons, no outward supply. Casual taxable person, there is no year. Is there max and max 90 plus another 90, 180 days. NRTP, non-resident taxable person, 90 plus 90, they don't finish in a year. OIDR, this fellow is outside India, so they've specifically excluded them. So these people need not compare and then prepare that statement. When they are preparing the statement, they need to have a reconciliation statement. GST 9 is an annual return. This is annual return. This is a reconciliation statement. Earlier, this reconciliation statement needed to be audited by a chartered accountant or a cost accountant, and that's when they upload this. Now they said not required. If your turnover exceeds 5 crore, when your turnover exceeded 5 crore, you first of all require a reconciliation statement to be given. That when you're giving, you can actually give it self-certified. You can actually give it as self-certified. You yourself can certify and then give. So GSTR 9 is required for everybody except the person that they have mentioned. But that particular statement will also have an annexure of GSTR 9C, which is a reconciliation statement. This need not to be audited. That has been revised. So section 44, this comes under section 44, is been amended. They have revised and they have put it under the law. Earlier it was also exempted, excluded by notifications and circulars. Now they have made it in the law itself, saying that no need of. So a lot of work that was done by a lot of chartered accountants and cost accountant is gone. There is no audit now, no audit under GST. So I myself has to self-certify enough the reconciliation statement. We'll have to wait and see how this would evolve over the period of time. So an MCQ question is the max and max you can expect in this particular area. So as a student, you need to understand this. So that these are the amendments that we have in the statutory update. I've already covered all. So now let's look at what kind of questions can come from each of it. The exemption amendments can be asked under evaluation question. They can give you an item saying that, okay, this Mr. Raju is also providing training program and all that. Or they can give you in a case study question wherein they can include any of these exemption inside it. These are the two methods in which they can ask the question. Revocation, cancellation, time limit extension can be asked as a practical question, either MCQ or a practical full-length question, which can be clubbed with cancellation. So cancellation area becomes a little important now. E-invoicing question, if the chances of asking a question is less, considering it was asked earlier, but if they are asking an e-invoicing question, the government and local authority amendment can be tested, but market is not very important in terms of exam. Blocking of e-way bill can be asked as a question wherein they can ask you a practical question, give you a case study in the statutory update itself. They have put in a case study inside it. You can look at that. The shopkeeper sells a pen for 100 to the buyer. After the sale, the pen belongs to the buyer and the shopkeeper does not have rights on the pen. This is a transaction of sale. Okay. Mr. A registered person paying tax under regular scheme, has not filed GSTR1 for the last 2 months. Mr. B Haryana wants to generate an e-way bill for goods to be supplied to Mr. A. As per the earlier position of law, Mr. B would not have been able to generate e-way bill with Mr. A's GSTN. Reason? He has not filed the return. It would have been blocked. But in terms of the amended provision of the law, there is no more restriction in generating e-way bill, as Mr. B, who is making outward movement of goods, the regular tax return filer. Because the supplier is a regular person, he has not delayed anything, he is not blocked. He can generate, and he can even include as a customer a person whose GST number is blocked. If the Mr. A wants to generate an e-way bill in respect of outward supply of goods to Mr. H, e-way bill generation is blocked in that case. An outward movement of goods by Mr. A who has not filed GSTR1 for last 2 months. That's blocked. Outward supply is only blocked. So that kind of this can be put into a practical question. I still don't know what is the reason why they have given the first two sentences. We'll have to figure out. So Yeah, they simply said three sentences. I think copy paste issue or something like that. Anyway, so this kind of a question can come, or if they want, they can ask a question on like whose e-way bill will be blocked, or blocking of e-way bill, given short notes on that. So there are 4 points that you can have, like these four people cannot. And if there is a sufficient reason given, you can actually get an extension, like you can actually go and tell that please allow me to file. They'll do that, the commissioner can do that. Okay, that's also part of that provision. So that is the second type of question. In late fee, they can ask you a question on delayed. So you know that the interest computation is now changed. Okay, section 50, it's not changed in this exam, it was not changed in last exam, it was changed in last to last exam. Now if you are somebody who's filing the return delayed, your interest computation is on the net GST liability. If you miss out an invoice and you're computing interest, it will be on the invoice value. This is how that section 50 provision has been amended last time itself. Now they can add an additional thing saying that I've filed the return delayed, I have also paid the taxes delayed. So this too can create two type of computations, and then they can give you they can ask you what is the interest payable, what is the late fee payable. This kind of a question can come from this, or an MCQ question on returns if they are asking. Chances of less, because MCQ question on only return is 10 marks. They're not going to ask. They are only going to ask 2 to 4 marks questions from that particular area. So this is the this is what you have for May exam compared to your statutory updates by ICI. Okay, so I hope you had an understanding, clarity on this particular provision, and I hope you will prepare well for your exam.